welcome to another episode of Straight from the Fund Manager. Joining us today is Vivek Sharma, Fund Manager of Nippon India Corporate Bond Fund. Hi, Vivek. Thanks for joining us. Vivek, before we start talking about the corporate bond fund from the Nippon stable, give me a sense of what the outlook on interest rates is going ahead. It does seem like with a delayed rate cut in the US, India or the RBI may not be cutting rates too soon either.
Sure. So over last 12, 18 months, we have seen a lot of volatility in incoming data, be it inflation or growth numbers or the trade deficit numbers. But the good thing is over last 2, 3 months, the data has been coming on a very positive note. Inflation has been coming down month on month, both domestically as well as in global markets. Fiscal deficit as announced by Government of India in its budget this year is a tad better than what market was expecting from 5.2 to 5.1. Current account deficit numbers again are looking very positive, similarly for the next year. And if we look at inflation numbers for the next 12 months as projected by RBI, which is 4.5%. So I think all these data prints makes in for a very good recipe for a central banker to start cutting rates. But as you rightly mentioned, RBI I think has been waiting for US Fed to start cutting rates, and then they would follow suit. So in that backdrop, I think we are looking at rate cuts possibly 3 to 6 months down the line from here.
Right. Vivek, that's a fair point. I think a couple of months down the line is what seems like more of a realistic expectation on a rate cut from the Reserve Bank of India. Let's talk about the Nippon India Corporate Bond Fund now. What is the nature of this fund? Where does it invest? What is the underlying?
Sure. So, just to give you a brief perspective on this category of corporate bond fund, so what SEBI has defined this category largely has no restrictions in terms of the duration profile of the portfolio, but what SEBI has defined is the rating and the construct of the portfolio. So, the fund is supposed to invest 80% of its assets in corporate bonds, which are rated AAA and AA plus, and remaining 20% in other asset classes, or be it corporate bonds or sovereign assets. So in light of this, we have positioned our corporate bond fund in the intermediate duration category, wherein we have positioned this fund within a duration band of 1.25 to 4 years. Asset wise, the fund invests predominantly in corporate bonds as mandated by the regulator. On the rating profile, fund is 100% invested in long-term AAA rated assets.
Vivek, let's talk about how the carry and their M2M impact may help achieve better returns for investors investing in this fund.
Like I mentioned, the fund predominantly invests in corporate bonds. So a larger chunk of returns are generated through accrual income.
Right.
70 to 80% of the portfolio is in corporate bonds, which try to focus more on the carry aspect and try to capture higher yields through a mix of private and PSU corporate bonds, whereas remaining 25 to 30% of the portfolio tries to play on the curve spreads, where we try to take duration exposure through sovereign assets or longer maturity corporate bonds. And it's a good mix of both duration and carry as once yields start falling, as we are looking at going forward. The duration gains can be captured through a higher duration component, while the carry remains stable through good quality corporate assets.
Okay. Also, I think, Vivek, while this is a debt asset class, I think it's still critical for investors to know how risk is mitigated by you or the fund manager who's running the Nippon India Corporate Bond Fund. Can you share with us the idea of fund casing at Nippon?
Yeah, so fund casing is something very unique feature which we have at Nippon India Mutual Fund. And for each scheme, we have a different fund casing. Coming to a corporate bond fund, we have defined our fund casing for this product in terms of the duration profiling, rating profiling, and the concentration uh, risk. So on duration front, like I mentioned, fund has a strict band of 1.25 to 4 years. So a fund manager, even however good markets are, and he's tempted to take higher duration risk, he is not allowed to take duration risk beyond 4 years in this portfolio. Similarly, in terms of rating, we have positioned this portfolio as 100% AAA, So a portfolio manager cannot invest in anything which is rated below AAA in this fund. Similarly, on the concentration bit, we have restricted issuer level exposure and group level exposures in this portfolio. Just to give you a number, a regulator allows to invest 10 to 12% in any AAA rated issuer in your portfolio. But in Nippon, we have restricted ourselves to 7.5% in PSUs and 5 to 6% in private AAA rated.
Right. Vivek, lastly, can you tell us which kind of investors is this fund most suited for? And with interest rates expected to come down, is now the right time to invest in corporate bond funds?
So, largely debt products are, part of everyone's asset allocation. One should have typically debt funds as a part of asset allocation strategy. So, but the proportion can vary depending on their needs of income or growth-oriented returns, what individual is looking at different points of his life cycle. In that backdrop, I think corporate bond fund suits really well to all sets of investors, especially in current environment when yields are so high. Just for the sake of numbers, currently, corporate bond funds are having YTMs close to 7.75 to 8%, which are very good rates to lock in this interest rate environment, especially when you are looking at yields to soften going forward over next 12 to 18 months. So, one, very attractive rate. Second, it gives you liquidity for the investors. You can redeem your money at a 1 day's notice. Thirdly, you have a diversified portfolio of securities in good quality asset. And
Hmm.
lastly, I think the tax efficiency which a fund like this provides in terms of deferred taxation vis-a-vis any traditional instrument.
Right. Thank you very much, Vivek. Thank you for talking to us and telling us more about the Nippon India Corporate Bond Fund. Thank you.
Thank you.
Mutual fund investments are subject to market risks. Read all scheme-related documents carefully.